Greetings, Dwayne, CFRN. It's time to do the recap. A couple days now, I haven't gotten you out a standalone recap of the Concierge trade alerts, and my apology, but it's just been busy. You know, life happens. As they say, I'm sure at some point it has happened to you. We're going to talk about couple things. We'll go over, the trade alerts, of course, and we'll touch base on our last free trade, which, as you can see, this is the address where, where'd that go? What'd I do? I did something wrong. Okay, let's try that all over again. This address, CFRN.net /free Emini trades. If you go there, you can get free trades. Our last free trade, we do 3 a week. I was originally going to do 3 to 5, but then the 1 trade a day and just so much, I didn't want to over promise and under deliver. In fact, our goal is to always under promise and over deliver. So 3 a week. We had a great one Sunday night, and then we had one Tuesday. Was it Tuesday or Wednesday? We're going to take a look at in just a moment and look at all of them. But the one we put out, Tuesday, okay, that one was the first one since we began doing the official free trade business again. Remember, we did free trades for 3 years. We did a public beta test for 3 years, where every night, almost every night, I would give you free trades, multiple markets, and you would do what you would do with them, and then the next day we would recap them and talk about them on the radio show. And all the while, I was encouraging you to the best of your ability, take advantage of those free trades, which were freely available to everyone, so that when the beta test was finished and it became a premium product, you would have the wherewithal to take advantage of the product. And so many of you did, and I'm so glad that you did. Now that it's been a premium product for a couple of years, I think we're coming right up on the 2-year mark, 1.5, 2 years, I thought we should do it again. We can't do it on the scale that we did it before, because that would not be fair to our concierge clients. But not one of them has complained that I'm giving away 3 free trades a week. Not a whimper, because that speaks volumes about our community. The people who make up our community, the traders, they believe in giving back and paying it forward just as much as Michael and I do. And hopefully you're of that heart, mind, and spirit as well. Whether you're a partner, a client, a member of the radio audience, or someone who's just checking us out for the first time because of the free trades, we're glad you're here. Hope you'll find what you're looking for. If you don't, ask. Well, we have been known to do things because somebody requested it and we hadn't thought of it before. Some things we'll never do, but you can still ask and we'll tell you why we won't do that or can't do that. But our suggestion box is always open. Now, the trade that I gave out Tuesday, that went out at... It was kind of, I wanted to switch it up. We had never done one in the middle of a live radio broadcast. Now, of course, I had it mapped out ahead of time, but we published it to the free trade page on our site during the live radio broadcast at 12:30 p.m. Eastern. And that trade promptly got stopped out. I try to gear the trades so that once I publish them, there's couple of hours that go by before they actually trigger. This one, it's as if the market were waiting, and the second I published the trade, we made a quick little drop, and got stopped out. Now, getting stopped out, that's no big deal. I don't want to make too big a deal of it because that's a part of trading. Okay, that's the truth about trading. I wrote an article. I was prompted to write a two-part in-depth article about getting stopped out because it was the first one of our free trades since we started doing the free trades again on October 12th. It was the first time one of them just straight up got, boom, stopped out. So I felt it prudent to do because when you start trading, you're going to first get your feet wet. And you're not going to have any idea what you're doing, and you're not going to know if you got stopped out or if you made a gazillion dollars of funny money, okay, in the demo with the virtual cash. But then you'll get the hang of it, and then you'll start working towards your 10 consecutive days so that you can actually go live once you've proven yourself consistently profitable. And lo and behold, you'll have some really great days, and then all of a sudden, you'll get stopped out. I need a sound effect for that, but I don't have one. And for many people, that just becomes like an earth-shattering, life-changing experience. All my hard work, all that I've done, all the hours that I've spent, and I got stopped out. I must have misread the indicators, or my platform let me down, or my data was lagging, or the indicators don't work, or my mentor steered me wrong. The list goes on. How about this? How about this? You said that I believe it's going to be partly cloudy with a chance of rain, and it snowed. Not just a little sleet, but like the worst snowstorm in 100 years. That happens, okay? Weathermen have their Doppler radar. We've got our technical analysis tools, and we do our very best work, and sometimes the market goes the opposite direction of our best trade. The sooner we learn to accept that, see it for what it is, just another trade, not let it define who we are as a trader, not let it eat us alive from the inside out, the quicker we can get on down the road to becoming a consistently profitable trader. Now, tell me if this isn't you, okay? Because if you've been trading or have traded, now some of you have graduated beyond all of this, but I bet you back in the day when you first started, this was you. You were trading, you had a couple rough days, you had some stomp outs, and so you said, whoa, I'm going back to the drawing board. I'm not going to just sit here and trade every day and lose money. I'm going to put together the perfect trade. I got the platform, I got me some indicators, however you came by them, you got them, and I'm going to figure out the perfect trade that will take me from my entry to my target every time when all the stars are aligned. And, just that whole getting stopped out business, that's for chumps, man. I'm not going to do that. Okay, right? We did it. Come on, we all did it. Now, some of us went back to the drawing board for a few days, some for a few weeks, some for a few months. Finally, when we could no longer avoid it, when we couldn't come up with another excuse why today wasn't the day that we had to actually break down and put on a live trade. I mean, last week we blew it off because it was the Fed week. Oh, that wouldn't be conducive. And, I mean, when we come up with all these reasons to just buy us another day or another week even where we don't have to trade, because once we put that trade on, we run the risk of being wrong, a term we don't use, by the way. And then where are we? Well, now I've seen people go to the drawing board, spend weeks, months, watch the market, finally get up the nerve, run out of excuses, put on the trade. I mean, and it's almost like this is so cruel, Couldn't the universe just cut the guy, cut you a break just as once, and let it go to target? It doesn't. It just stops you out. Just didn't even mess around. Just wham. And so, do you pick yourself up, dust yourself off, and then get right back on the platform and place another trade? No. Not at all. In fact, what we end up doing, we go kill another 3 weeks or 3 months diddling around. So, anyway, we're all beyond that now, right? We've all grown up, got a grip on ourselves, we're moving forward, and we mean business. Trading in the zone, can't stress enough, read the book, okay? But our sponsor, Audible, will give you a copy of this book, Trading in the Zone, by my dearly departed friend, Mark Douglas. They will give you a copy of the book. It's an agreement that Mark had with Audible, and to the best of my knowledge, his wife still has the agreement in place. Tune in to the radio show tomorrow, live, and I will tell you what you need to do. And you can download the book from Audible. Now, this is not some bootleg copy, because his wife's had a lot of problem with this bootleg nonsense, and it's just disgusting. But come to the show tomorrow. You'll hear the commercial from our sponsor, Audible, and you'll be able to go and get yourself a legitimate copy of the book, okay? And she still gets paid her royalties, and everything is as it should be, okay? That book will help you get over the hump of dealing with stop-outs. The book taught me such a valuable lesson. You don't have to know what's going to happen next to make money in the markets. What? Of course you do. Of course you got to know what's going to happen next. That's the only way you can make any money. See? That's how 90% of the people end up in the 90% line, because they believe that untruth. The truth is, you don't have to know what's going to happen. You don't have to know what the market's going to do next. You simply have to know what you're going to do next. If you know what you're going to do next, man, you're in like Flynn. So come hang out on the show with me tomorrow. If you don't know how to come hang out on the show with me tomorrow, I'm going to show you how to come hang out on the show with me tomorrow. Let me take you here. Okay. Let me take you here. Let's go CFRN. .net. Okay. Oh, I promised you guys a link. I haven't created it. I'll do that today. Please do it today, Dwayne. Click Emini Radio Blog. Click Watch Recent Broadcasts, and boom, you're on our Google Plus page. Okay? That's where you'll be able to watch every live radio broadcast that we do every day. We archive them here. Audio, video. I still have to get Thursday's show uploaded. And I have to move quickly because we have a partners meeting tonight. So there's another reason I was bringing you the page. It'll come to me in a minute. let's just get rolling with this week, okay? Now, these are this week's weekly trading zones. The weekly trading zones go out to the partners before the market opens on Monday morning, 6:15 a.m. Eastern. All week long, I've been displaying last week's zones to the CFRN community during the radio show, out of respect, of course, for the partners, because part of what they've paid for is access to the zones. Now, ask yourself this question. If you had known about these areas before the market even opened for business Monday morning, could that have in some way impacted your trading for the week? Could you have possibly done a little better? Now, price opened up Sunday night right into weekly zone at 2064/65. We made a run at the zone below, which we got down to 57.50. Now, the actual zone was at 56. Okay, 55, 56 is the zone. Got to 57.50. So that means we missed it by 6 ticks. Now, some would say, well, that's not bad. It's not. That's not bad at all. The distance from zone to zone is from 56 to 64. That's 8 points. 4 ticks per point, so that's 32 ticks. So out of 32 ticks, we missed it by 6. So that means 28 ticks, right? Times 12.50 per tick. I don't know, what's that worth? 28 times 12.50, that would be $350 per contract, all right? And that's on a move where we didn't make it all the way. Now, that $350, that's just on the way down, okay? Then there's $350 on the way back up. Now, the entire move, remember, from 56 to 64, we decided that was 8 points. That's 8 times 4 is 32 ticks. And so 32 times 12.50, that's actually $400 per contract, right? So we've got 350 down, 350 up, then we got 400 down, 400 up, 400 down, 400 up, and follow the horizontal line of my cursor. Look left. See that? Okay. Price moves back up into the zone where we again consolidate for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours. Then we make a 2-hour run to the zone overhead. Now from 65 to 72, that's 7 points at $50 per point. So that's $350 per contract, zone to zone. Now, we had a Fed meeting on the 28th, and that happened at 2 p.m. in the afternoon. So this big red candle right here, that's the Fed announcement, okay? Now, when prices hit a weekly trading zone, you're going to get one of 3 things: consolidation, rejection, consolidation, 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 rejection, rejection, consolidation. It's always one of 3 things. Now, the longer you work with the zones and trade the zones, and once you understand our indicators and how they work in conjunction with the zones, the better you're able to do as some of our traders do, and that's simply navigate from zone to zone. That's how they earned their money every week. It's not necessarily with the Concierge Trade Alerts, not necessarily with our indicator set, but in many cases, it's a combination of the 3. Now that's a heady elixir when you have the zones and the concierge trade alerts and the indicator set to let you know if you've got the wind at your back, if you just had a bullish cross, price pulled away, price pulled back, and it's just clear as day on the hourly that price wants to make the run right here up to 72.73, and so you downshift to that 4-tick range chart. There comes your bullish cross, price pulls away, pulls back, up close, you're long, and into the zone. And done for the day. Our daily goal is only $100 a day. After you've increased your account balance by $2,000, that's when you add your second contract. We then go on a calendar-based schedule, and over a period of 24 months, you can work your way up to a 20-contract trader. Why 20? Well, it's a nice round number. If you make $100 a day with one contract, with 10 contracts, that becomes $1,000 a day. With 20 contracts, that becomes $2,000 a day. $5,000 a week, $10,000 a week. Our president says that if your household earns $250,000, okay, that's $1,000 a day, $5,000 a week, times 50 weeks, $250,000. You are one of the wealthiest Americans. Now that's based on a 2-wage earner household. But hey, let's say you learn how to make $100 a day, and you work your way up to 10 contracts, and then you just decide to you know what, I'm going to hit pause. I've been climbing for a year. I'm going to hit pause. I've learned how to get my 2 points a day. I've learned, and it doesn't have to be the S&P and 2 points. You can make your $100 in the Russell, the Dow, crude, soybeans, and it can even be a mixture. You can get 25 out of soybeans, 25 out of the Dow, and 50 out of the Russell. Still $100 per contract. When you increase the number of contracts, you don't increase your workload. You don't have to get more ticks or more points. You don't have to spend more hours in front of the screen. You do the exact same work. You just get paid more money for doing the same work. The biggest mistake people make is coming in, and because they've cashed in a retirement plan or sold a business, they understand everything I just said except the wait part, the develop discipline part. Well, yeah, I'm sure that's very smart for most people, but I'm a clever guy, and so let me just go ahead and get after those 10 contracts, because I really, I'll feel very comfortable knowing I'm making $1,000 a day, and then I can enjoy my retirement. Well, yeah, I'm glad you have money, and I want you to keep it. So please, please, don't put the cart before the horse. That's just awkward, okay? When you do that, you're going to blow out, and you're going to have a frowny face, okay? Nobody likes a frowny face. So if you'll just be patient, if you'll allow us to help you build your business one contract at a time, I think you'll like the results much, much better. Okay, let's take a look at let me talk to you about the free trade. Why don't I do that real quick, okay? Now, the free trade said, let me see if I can't just bring up a copy of it. I think I can. I think I can. Is it on this page? Yep. So I may not have refreshed this page. Let's see. Let's see if it's going to load up. There, it loaded up. Tell you what. I'm not going to read all of this to you. I'm gonna challenge you to come and read it. Okay? It's the truth about trading. It talks about, it's now been 15 hours and 56 minutes since we issued that trade. The next trade, by the way, is coming out tomorrow at 10:30 a.m. Eastern. So get signed up. Okay? Where did I go wrong? Trading's not easy, but it can be simple. Pepperoni or stop outs. Charts on steroids. What really matters? Never blow up or blow out again. Now remember, the short side of that trade got stopped out. The long side, a little different story. I come back on the 29th, which was this morning, Phoenix time, West Coast time, 1:36 a.m. Actually, it was 1:36 a.m. Eastern. Yeah. I came back and I wrote about the next right thing. So here it was only 10:30 p.m. All right. The next right thing. Because up here, after talking about the whole concept of being stopped out and what it means to you as a trader, it says now we simply do the next right thing. We take the next trade. So the next right thing. So for 24 hours, give or take, I've let you sit with the best advice I could muster. A, don't freak out. B, do the next right thing. And see what happens when you do the right thing. As you know, our alerts are never a one-trick pony. On Wednesday afternoon, prior to the Fed announcement, we specifically broadcast on live radio, as always, flat on the Fed. In other words, we do not recommend that you trade it as a news event. We recommend that you are flat. Now, it was so tempting because 3 minutes before the Fed announcement, right here, the long side of this trade was 2076. And with 3 minutes to the Fed, it was so tempting to want to go long. It ran up to 2079. That would have been a nice 3-point gain or 12 ticks. But we told everyone in the audience and in the live trading room that morning, please don't trade the Fed. Let the dust settle. When the dust settles, then we'll go back in and we'll see what we can make of it. Okay? So, along with telling you to consider being short below 2052, the stop out, we also said if that isn't profitable, be long at 2076, above 2076. At 3 minutes to the Fed, the opportunity was there, but we don't want to disobey a direct order, which was to stand down. So we watched and sighed, and the clock ticked on. So, how long do you have to stand down? On something the size of the Fed, I like to give it 30 minutes. 30 minutes came and went. We put in a double bottom on the 1 minute chart. In fact, I'll show you what that looked like, because I think I got it right here. I do. Let me just open it up so you can see it. Okay. This is on a 5 minute chart, so I could get more on the screen. But this was the original stop out. The swing low was 51.25. Okay. The alert was to be short below 2052 or long above 2076. We got to 2051.25. It's a stop out, just plain and simple. No two ways about it. In fact, it stops out. That is the low of the down move, and we start building legs in the other direction. Okay. All the way over to here. Fed announcement. Okay. Now we start climbing again. Oh, I've got a different chart that I notated. Where is that? That's the one I want to show it to you on, because it's not that one either. Must be that one. Ha, ES 1 minute. Nope. That's not it. Let's see. Yes, is that it? I think so, because that says 1 hour. I had a chart. Oh, you know what? I published it on the Google Plus page. Let me do that. That'll be, rather than me rooting around looking for it, let's just go look at it. Okay. All right. Click to enlarge. Okay. So this is the S&P 500 hourly chart. Okay, shows the stop out. Now, on the first run up, 3 minutes to the Fed, no, because we don't trade the Fed. All right. Fed announcement this hour right here. We go all the way down. I mean, we almost came back to test the trigger on the south side, but not quite. We did stop smack dab at a smack dab. That's a weekly zone right there, by the way. Show you. See right there? Now, some of you got to be wondering, well, wait a minute. How is it possible that you gave that number out before the market opened? This is no longer, this is last week's zones, but this is now this week's zones. Here. How's that possible? Well, we've been doing it since December 14th of 2009. It is a proprietary model that we use, and it has served us very well for coming up on 6 years. So as a partner, you'll have access to those. And the day I retire, you'll be able to attend a seminar with thousands of other traders and learn how it's done. Okay? Michael and I have already agreed we're going to go out like Seinfeld on top, and that's going to be our swan song. Okay? All right, so let me get you back to these pictures. Okay? That's the hourly. Okay? Now, what I did was I created an up-close picture. Click to enlarge. 1 minute chart. Okay? So price comes up. The Fed says we're not going to raise interest rates. I mean, this looks like a market throwing a temper tantrum, doesn't it? You know what? I think I must have goosed this up to a 5 minute. It says 1 minute. You can check. Let's see, 1405. Yeah. It doesn't matter. You can go look at the chart. I started with a 1 minute. I might have bumped it up to 5 minutes so I could get everything on the screen. But go look at your own chart. Don't ever take anything I say for granted. Always go check it out for yourself. The same goes for anybody else that tells you something that's really important about your trading, about how you're going to earn a living, about this business. Always, even, I've been telling you the truth for years, but who knows? Maybe I could turn. Maybe I become a bad egg or a rotten apple, right? So, always make sure. Always make sure. So, this shows you really well. No, it must be the 1 minute chart because it shows the 1 minute double bottom. Anyway, let's move on. Leg and a retrace, and leg and a retrace, and a leg and a retrace, and a leg. And it pulls right back. And then off she goes. Put in a swing high up at 20. I think it hit 2086. No, it's 2085 and change. Okay. See, this is a picture, so I can't. It's not like a chart where I can highlight it and show you it's a picture of a chart. But you can go and look at Wednesday's chart, S&P 500. This is 2 o'clock Eastern. Okay. Now, by the time we make the move back up, it's 90 minutes later. And I'm pretty sure that's not 90 candles. So that's why I think I shrunk it back down to a 5-minute chart. Or increased it to a 5-minute chart. Anyway, my point is that we had an opportunity, rightfully so, not here when we would be disobeying the direct order, but here, 90 minutes has gone by, we're back to plain vanilla, we're not trading news now, we're just trading the market, we get a trigger, and we make a move that is sufficient to not only give us our points for the day, but an additional, the market makes 9 points available. So I said all that to say that. And I think it's important that you understand. See, what if we'd have got stopped out and just gone back to the drawing board? Right? See, we already know that our methodology gives us a definable edge in the market. We understand that people around the globe are able to be consistently profitable with this methodology. And nobody gets rich overnight. Nobody learns this overnight. Trading's not easy, but it can be simple. You're going to have to put in some time. You're going to have to put in some work. And there's no guarantee that you're going to be successful. Some people may tell you, with their method, even a caveman could do it. Trading is not suitable for all people. You just may not have the nerves, the steel, or the stomach to sit through these trades. And maybe you do. That's why we give you a 1-week free trial to find out if it's right for you or not. If it's right for you, you can enter our 90-day mentoring program. This is after you've used us for 5 days. Used us and abused us. Private mentoring sessions, use our indicators, use our methodology, ask a million questions. We treat you with dignity, we treat you with kindness. And if you say it's not for me, we shake your hand and say goodbye. But you're still welcome to come hang out in the radio audience every day. If on the other hand you go, man, this is exactly what I've been looking for. Something that I can understand, something that tells me the exact price where I'm supposed to go long or the exact price where I'm supposed to go short. It gives me a definable hard stop. I know I don't ever have to question where my stop goes. I know it's always in the same place. If you come to our live trading room, if you trade the 24/20 blueprint, you'll never risk more than 8 ticks on a trade. In fact, you'll risk 8 ticks on every trade. 8 ticks. The only time that changes is if you're trading bonds. We only risk 4 ticks because bonds pay $31.25 per tick. We only need 4 ticks to hit our goal and be done for the day. All right? So that's the story of the free trade. Today's now Thursday. We got a partners meeting tonight. And then tomorrow morning at 10:30 a.m. Eastern, that's when the new trade will come out. Now, if you try to go to this page and you're not registered, it's going to say no. You got to get registered. Just to give you an idea of what's happened, the previous trade, which came out on Sunday night. Now, see, this trade was issued. What day was this? I must say somewhere. Okay. It was Tuesday, yeah. S&P 500, Emini Futures. All right, so we've already covered that. 30-year bonds. This one came out 7 p.m. Sunday night. Long above 157.17 or short below 156.26. The results, 28 ticks were made available. Bonds pay $31.25 per tick. It's been 4 days since we published that. Any of these charts, they look very small, but if you click them, they become very large, like that. This is a 5-minute chart. This is where the bonds triggered. This was just a beautiful trade. Now, the first move up, you could have had your goal for the day here, or here, or here, or here, to milk 22 ticks out of the trade, okay? I should be learning from you, all right? By the time all was said and done, this thing actually produced 28 ticks. That's what the market made available. We give you the exact price to get in, 157.17. Actually, it says consider being long above 157.17, right? So that's going to be 157.18. Now, you can use a hard target, which would be 4 ticks. That's what you need to get your daily goal by the 24/20 blueprint. But maybe you are a more experienced trader. Maybe you've been at this business of trading for a while. Maybe you understand the power of the Concierge trade alerts. And so maybe you're comfortable putting your stop right here, okay? Because you're looking for something like this. Now, did this trade actually, I don't have another snapshot of it, but did it continue on? Did it go even higher? Did it do $1,000 per contract and then some? It did. Okay? But in order to get to that, you've got to watch price go way up here, and then you've got to watch part of those profits evaporate. And then, I'll show you a bond chart here in a minute. You'll see it. The tough part is this. See, because in this drawback, you don't know if it's just a normal, healthy retracement in an uptrend, which it was. Leg, retrace, leg, retrace, leg. That's what happened. But see, when it's pulling back, you don't know. So, couple things, and we teach you how to do this as a partner. We teach you to, number one, use a hard stop to take some or all profits. B, we teach you to trail your stop. C is a combination of A and B. You have a hard stop where you take some or all profits, and if you just take some profits, then you trail your stop on the rest. Okay? That's all. That's why it's a 90-day mentoring program. Not because it's that complicated. We only use 2 indicators in the live trading room. The CFRN, the CFRN slingshot, and we draw a few trend lines. We have additional indicators, we have additional trades, but we want to keep it as simple as we possibly can in the live trading room. Because why? Because trading is not easy, but it can be simple. We want to emphasize how simple. Now, when you come into the trading room, I had a face-to-face meeting with someone today. He happens to live here in the Phoenix area. He's getting ready to become a partner. And he says, man, I get so confused with those 6 charts every morning. He's like, I go, okay, here's what you need to do. Think of it as just one big market. And out of his mouth, he said, because you're doing the same trade in every market. And I said, except we're in Starbucks and I didn't have my bell. I need a mobile bell. That's what I need. Oh, I bet I could get a bell sound effect on my cell phone. Note to self: get a sound effect on your phone. Okay, moving along. Bonds, we're good. Now the trade before that was crude oil. Consider being long above 46.50 or short below 44.60. The trade triggered on 10/23, and this is what happened. this is what happened. A 5-minute chart. The first move down paid 40 ticks, or the market made 40 available. I don't know what it paid. The market made 40 available. How much did you accept? Did you ever think of it that way? How much? How does that scripture go? You have not because you ask not. So the market said, here's 40 ticks. How much will you accept? Crude oil pays $10 per tick. So if you got the last little tick, that's $400. If you know how to do that, please teach me. Next move, market made 23 ticks available, and 20, and 16, and 19, and then there was some also rands. Okay? All right. Now, the free trade before that was the Russell. Long above 1170, short below 1147. Here are the results. We triggered at 1147. The first move down in the hour that we triggered, $530 per contract. Important prices, important areas are almost always tested, and so on the second move down, $660 per contract. I guess that says per contract. Okay. Notice where price turned both times at a weekly trading zone. Not unusual. When you get into a trade like this, good idea to make sure if you're going to run into a zone that you take some or all profits at that zone. See, if you took all profits at this zone when it ran back up and triggered a second time, and again, you don't have to trade it off the hourly chart. You can downshift into that range chart so that you only have to risk 8 ticks. Okay. After the Russell, another crude trade. We've worked our way all the way back to 1018. Long above 48.05, short below 47.80. Here's what happened. Here's the trigger. The first move down was good for 14 ticks, and it takes 10 ticks to be done for the day. It continued down and actually made 36 ticks available. Then there was a drawback, draw down, draw up in this case, and ultimately, if I went further to the right, there was actually more available, but this is sufficient. You get the idea. At this point, the trade triggered at 7:20 p.m. Eastern on a Sunday night on the 18th. Now, by the wee hours of the morning on the 19th, we already had 51 ticks available. It's $510 per contract. That says crude pays $12.50 per tick. That's not true. It pays $10 per tick. I need to go in and fix that, I guess. Okay. And this talks to you about the 3 different legs. I went into some detail on those. All right. On the 15th, we had put out a free trade. Long or short below 1134. Long above 1148. We triggered on the short side, $350 per contract potential. We triggered on the long side, $1,480 per contract potential. Okay? And the trade before that was on... Is this the same trade, the 15th? Yes. Yes, this is. Okay. Okay, and then we had a trade on the 13th. Consider being long 30-year bonds above 158.19. We triggered on 10/14 at 8:30 a.m. Eastern. We put in a high that day of 159.21. That's 35 ticks times 31.25 per tick. And so this first move was 13 ticks times 31.25 per tick. And then price came back. Important prices, important areas, almost always tested. Reset, triggered again. Now, these are two separate runs, the 13 and then the 23. You could have gotten stopped out with some nice profit on this trade because I don't think you're going to get out with exactly 13. Then we run up 23, and as it pulls back, that's probably where you get stopped out with some nice profit. If you're, again, a more experienced trader, you've been at this a while, and you have reason to believe, maybe something I've taught you about Fibonacci extensions, you believe higher prices are yet to come. So maybe you're trailing with a stop a little further back. The market made $1,000 per contract available. The market made 35 ticks available. 32 ticks is $1,000. Okay, market made 35 available. If all you took out of that trade was 4 ticks, you did a great job. Okay, your day will come. Right now, the idea is to simply get you consistently profitable. Get you over the hump of believing that somebody like you could actually be profitable in the markets. Because you've been beat up and stopped out and lied to and turned inside out so many doggone times. You just, man, there's part of you that doesn't want to let go of the dream, but there's also a part of you that's kind of starting to doubt it. Because some people have messed with your head, and you've messed with your own head. That's the biggest problem we have, I think, is we mess with our own head a lot, and we have to stop that. It's not healthy. It's not good. Okay. And on the 11th, this was the first trade when we began this last series of giving out free trades. On the 11th, we said to consider being long the ES above 2010 or short below 97. The results were we were able to get our daily goal of 2 points, okay, on more than one occasion. And I actually, if you go in and read, you can get a highlight there of swing high was, remember the trigger was 2010. So there goes 2.5 points. Here's a stop out. Here is 2 points. And here is 2 3/4 points. So with the exception of B, each trigger presented our 24/20 daily goal of 2 points plus, or $100 per contract. To learn more about our trading methodology and Concierge Trade Alerts, take the live trading room trial here. If you want the alerts, you actually need to take the Concierge Trade Alert trial. That will also get you into the live trading room. Now, if you've been on the trial this past week and you're thinking about becoming a partner or a Concierge client, we have a special right now, and I'll just be honest, we've had a number of partners take it, or a number of traders take advantage of the special because it's a really good one. It gets you not only into the live trading room, and not only does it get your hands on the indicator set, it also gets you the Concierge Trade Alerts. Now, Michael and I divide up the duties, and he's been kind enough to take that off my shoulders. He will handle that. If you want to become a partner, if you want to get in there and start doing what we're doing, now you're not going to get rich overnight. Just hear me, please. Because unrealistic expectations cripples more traders than anything I know of, all right? This is not about getting rich quick. We don't sell lottery tickets here. This is about learning a skill set and using that skill set to build a business. That's how we think of our trading. It is a business. The more you treat it like a business, the more it will behave like a business. And all businesses have expenses, okay? The largest expense that you'll have in your trading business are the trades that get stopped out. See, it would be foolish to think that you could run a pizza parlor without ever buying any pepperoni, unless you don't want to have pepperoni pizza. And that's the most popular pizza I know, because I used to own Mystic Pizza Deli and Sub Company, along with my lovely wife, who, if you ask her, she'll tell you she did most of the work. So I don't disagree with that. I enjoyed that business. She hated it. I would go to my day job. See, that back then I had the day job, and then I would come and do the thing I loved at night, which was run the pizza parlor. But anyway, long story, we don't have the pizza parlor anymore. Oh gosh, that was a lifetime ago. We were just a couple of crazy, mixed up young kids. But boy, we were having a time of our life. Let me tell you, it was good. Good times. Okay, real quick, let me just show you what happened today with the Concierge trade alerts. That's what I promised you an hour ago, right? If that's what you really wanted, I hope you fast forwarded your way up to it. All right, let's go to ES1. ES1. ESZ5. Okay. Consider being long above 2082 or short below 2078. Here's 2082. And the swing high there is 84.50. It's 2.5 points. Now, I made a mistake last night, and I don't have a problem owning my mistakes. I put a trade out that ran right into a weekly trading zone. Okay? Now, if you know me and you know what I do and how I do it, I don't do that. That's not my thing. Okay? I was rushed, apparently. And so when you see that Dwayne has put out a concierge trade and it just runs right into a zone, then know that he made a mistake, and maybe send him an email and say, hey man, check the long trade on the S&P, because this trade should have been 2 points on the other side of the zone. But I can't change what's already happened. I mean, it's a done deal. Now, the swing high here was 2086.50. So if we'd have got triggered in at 2084, we'd still got stopped out on this guy right here, because it only went 2 ticks. Right? But we would have had a chance to pick up 2 there and 2 there. So, woulda, coulda, shoulda. I don't ever want to become that guy, so I'm sorry for the mistake. Short below 2078. Okay, you see that right there? That's a stop out. Then we get 4 3/4 points. Where does price stop and turn? At the zone. Is that unexpected? Not at all. It's just kind of what happens. Price gets above the trigger, resets, down we go again. Where? Right back to the zone. Okay? So you get a 4 3/4 point move and a 4 3/4 point move. And so that's the S&P for today, the 29th day of October, 2015. Okay. Next, bonds. The alert last night on bonds, I got that right, I didn't mess it up, said to consider being short below 157.20. Okay. 157.20 is right here. Okay. Now, the swing low is 157.17. That's a stop out. 4 ticks, we move our stop to break even. Some people with bonds move their stop to break even at 3 ticks, or even take profit at 3 ticks, because 31.25 times 3 is $90 and change. So that's close enough to the $100 per day that you can call it a day. But for the purpose of this recap, I'm just going to call it a stop out. Okay. Then we trigger again. Important prices, important areas, almost always tested. And we get $1,000 per contract move. Now, when price came racing down to 157.03, that means you had 17 ticks in the trade at a 31.25 per tick. Riding this retracement and staying in the trade takes a rare breed of cat. I don't know if that's you or not. Down here, the swing low was 155.21. Okay? If we had gone one more tick, and we didn't, 155.20 would have been $2,000 per contract per day. Now, that's for the rare breed of cat. $2,000 per contract. Ask yourself, could you ride that out? Now, I will say this. As you increase the number of contracts that you trade, actually being able to ride something like this out actually does become simpler, because at 17, I mean, you got 17 ticks in this trade. Somewhere on the way down or on the way back up, you know, if you're trading 10 contracts, you can sell 3 or 4 or 5 and make a nice profit. And at the same time, bring your stop to break even. So you've made a nice profit. You've got no risk in the trade because your stop's at break even. Maybe you're even at break even plus 1. So you've made a nice profit. You have no risk. Your commissions are covered. Whatever else happens is just goodness and grace. And when you're in that position, oh boy, talk about a carefree state of mind. I mean, you're a little excited. Maybe you get happy feet, but there's nothing wrong with happy feet. And so we came within 1 tick of the market making $2,000 per contract available off of the alert to consider being short below 157.20. Crude oil. We said to consider being short below 45.90. We got down to 45.16. So 74 ticks at $10 per tick, $740 per contract. However much you were able to take out of that, congratulations. Long above 46.30. First move was 46.52, so that's 22 times 10. And then the next move, we got up to 46.79. 79, so that's about 49 ticks. Okay? Whatever you took out of that, congratulations. On the euro, consider being long above 1,955. Okay? Just this first hour's trigger right here, we got up to 978. So from 55 to 75, that's 20. So that's 23 ticks just in that first hour, 23 times 1250 gives you $287.50 per contract. Okay? If you're trading 3, 5, 10, beautiful day. Price comes back, important prices, important areas, almost always tested. Off we go again. This time we put in a higher high retracement and then another higher high. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg. And now we're in a little bit of a retracement here. See how that works? From 109.55 all the way up to 109.60. 54 ticks. 54 times 1250. So the potential was 675. If you're psychic, if you're an ordinary person, you're able to get something out of that. Okay. Next, soybeans. We are now trading January soybeans, ZSF. We said to consider being short the beans below 878. 878's right there. Okay. We need 2 pennies. So we need 876. And that's all there was. The long side of beans was way up at 890, and so that never came into play. What? Now, this candle closed here, opened here, traveled here, and then ran up here. Okay? It triggered a second time, but it did not run 2 pennies. Okay? 2 pennies is the same as 2 points in the S&P. Okay, ES, we've done that. Dow. Okay, now look at the Dow. Yesterday, this was the Fed thing, okay? Here's the Sunday night Globex open. Into the zone right here. Consolidation. Zone to zone. Then we had that sell-off, spiked the zone, and then came right back up and stopped at the zone. Okay? The zone, consolidation at the zone. When this happened yesterday, when you get this big green bull candle, and then you get this little dark shadow here, that's one of the names for it. This is to be expected. Okay? There's no guarantee that's what's going to happen, or that it's going to take that shape where it goes, What this is saying is expect lower prices. If you have a significant area below you, then that could be your target. Let's just draw a quick fib. From the low of this hour to the high 2 hours later, .38% retracement. Whenever you have a powerful impulse move like this, you can almost always expect a 38% retracement. And that little green line hiding right in between the zones there, 38% retracement. What did it do? It sent price right back up to the zone. What's something you could do now? Say, boy, do I get long on the other side? Do I wait and see if it's going to come back on me? You could take a cursor and draw a trend line right up across the bottoms here. And you can extend this out. Just double click it. Make it a ray. Okay. Now, price closing below this trend line might be an opportunity to go short. If you get just above it, like right here, okay, shorting it, keep in mind that once we get above, see, this was good resistance. Good resistance. Now that we're working our way through it as we speak even, if price comes back, either this trend line or this zone will potentially serve as good support. Now, here's what I could see happening. price moves up a few candles, comes back through, comes all the way down, touches the zone, and then we put in a leg. See, leg, retrace, leg, retrace, leg. Get that retracement. Back to the zone, which serves as good support. And then price takes off like a rocket ship, hits the underside of the trend line, turns around, crashes and burns right back into the zone at 700/705. That's one scenario. Well, how do I know if that's going to happen or not? Well, you don't. But in your mind, what you learn to do, and this is what we teach you during your 90 days with us, and by the way, you're welcome to stay after the 90 days. There is a minimal monthly maintenance fee. You could stay a partner till Jesus comes, okay? But you get 90 days of intensive training, unlimited mentoring sessions, as much time as you need so that you understand exactly what we're doing, okay? And then, once your 90 days is up, if you want to keep coming to the trading room, the workshops, on Thursday night, any of the other things that we do, the weekly trading zones, you, as a partner, you'll always have unlimited access to the indicators. You own those for life when you become a partner, okay? Again, Michael has been kind enough to offer up his services to take care of handling all the wheeling and dealing and the offers. And so just get a hold of him, okay? If your trial's expiring, I don't think you want to miss this week's offer. It's pretty good. So support at CFRN.net, 949-42 Emini. We have only 2 more markets to show. The Russell said to get short below 1170. The swing low was weekly. These are this week's zones, I think. Let me double check. Don't want to. 1171.72. No, I didn't get this one updated yet. I'm so glad I checked. 72.73. This is actually last week's zones. Now, see, that's the power of the carryover. Okay? I'll talk to you more about that, on the other side. When you become a partner, we spend time one-on-one. I'll make sure you understand the concept of the carryover and the current week and how the two dovetail together so that you're never at a loss. You don't ever feel lost, right? If you do, call me. But you always have your business plan and your trading plan if you start to feel lost. The purpose of those plans are to tell you exactly what to do. Man, something blah blah happened and I don't know what I'm supposed to do. Go read the book, the manual that you wrote with your own hand based on the information that we give you. We show you how to write your manual. We teach you how to write it. We then review it, work with you on it, make sure it's something you can live up to. What I've found is people can be incredibly harsh on themselves when they write that blueprint, or not the blueprint, but the business plan and the trading plan the first time out. And sometimes I ask people, now, do you really think you can live up to that? Oh, yeah, I'm done fooling around, Okay. All right, well, when will your trading plan come up for review? Oh, I hadn't thought about it. Yeah, make sure when you write your business plan that it states in there how often your trading plan, which is different than the business plan, will come up for review. Can't change your swing every time you step up to bat. Can't change every week. Can't change every month. Okay? So, minimum, I think, should be 60 days. Probably 90, 1/4 is probably better. But write it in there. Now, you may be doing fine and your trading plan, everything's running on all cylinders and you don't want to change anything. Okay. You still bring it up for review. You have a discussion with yourself about it. Remember, if our car, if we have a nice car, we don't wait until there's black smoke coming out of the exhaust pipe to take it in and service it. Actually, unfortunately, some of us do exactly that. Okay? We don't wait until it won't start to question whether or not we've put oil in it lately. You follow what I'm saying? Preventive maintenance. In the military, I learned a lot about preventive maintenance. It's fixing stuff that's not broke so it doesn't break. Now, I know they say, if it ain't broke, don't fix it. Okay, well, what we would do is we would just take it apart, clean it, grease it, make sure everything really was in working order. Because, especially in the military, when we were dropping some of the things that we would drop underwater, you don't want something going wrong when it comes out of that chute. You want to make sure everything's lubed up and in proper working order. Very important. Same with all of your trading tools, your methodology, your attitude. It all needs to be evaluated periodically. And if you need help with the evaluation, in other words, if you're struggling to be honest with yourself, get a hold of me or Bert or Michael. No one's going to think less of you. In fact, we're going to admire and respect you because you recognize that you are dealing with a character flaw, a defective character that we all have. We all have defects of character. Some of us just are man enough to admit it and some aren't. You were man enough to admit it. Hey, I got a problem here. I don't know if I can trust myself anymore. Well, tell me about it. What did you do? What brought you to this place? When did you notice there was a change? How can we fix it? See, once I know where you are and where you want to go, I can help you get there. But if I don't know where you are, there's nothing I can do. And if you're not honest with me during the mentoring session, I can't help you. Okay? So you have to start by being honest with me. Pretty soon you'll find that you can be honest with yourself. And once you get back to that place of being honest with yourself, don't ever violate that trust again. Okay? Trust is not given, it's earned. So, some of us have done some things and said some things, and we know that in certain areas of our life we cannot trust ourselves. It's the people around us, the ones we care the most about, that usually suffer because of that. So let's not put anybody through any pain, including ourselves. Let's be honest. Let's be straightforward. Let's know what we're thinking. Be conscious of what we're saying. Let's mean what we say and say what we mean. All right? All right. One last market really quick. Gold. On Golden Pond. All right? We said to consider being short. Below 1154. 1154. Okay? I'm going to guess. I thought that was 1154. Nope. That's 1154. Swing low was 1144.20. So 2 ticks shy of $1,000 per contract. 2 ticks shy of $1,000 per contract. Now, how much do we expect you to get? I don't expect you to get anything. What I'm going to teach you how to do is to earn $100 per contract per day. That's my goal for you. Okay? And if we're on the same page and if we're working out of the same, if we're on the same page and in the same book, which is the 2420 blueprint, the chances of us being successful, well, it becomes a higher probability trade. I got to go. Got to get ready for the partners meeting. Got just 32 minutes to freshen up. Get something cold to drink. I'll see you tomorrow morning in the live trading room. If you need some help, I'll be at my desk for a few hours doing the partners meeting, the workshop. And so if you need some help, just reach out. Support at cfrn.net, 94942 Emini. Take care. I'll see you in the morning.